What is up YouTube? Today I'm going to be talking about CCIV stock and what I'm doing with my position. So CCIV is the ticker symbol for a SPAC company called Churchill Capital IV. So a SPAC or a blank check company is a company with only cash and no other business, and they look to acquire a position in a private company to bring it public. So the SPAC or the blank check company takes a 10 to 20% stake in the private company. However, the percentages may differ in some cases. This brings the private company public and is just another method for a company to become public other than the traditional IPO. So a SPAC is usually priced at $10, and once they find a merger target, the stock tends to move as people might want to buy into the SPAC to get a position in the private company when they do merge. So with that being said, let's talk about Churchill Capital IV. So Churchill Capital has been in rumors to merge with the EV company Lucid Motors, and now it looks like they are in advanced talks, and there's a lot of evidence pointing to the merger happening. This rumor and news of Churchill Capital merging with Lucid Motors pushed the stock from $10 all the way to $60. But keep in mind, if CCIV doesn't merge with Lucid Motors, the stock will probably fall all the way back down to $10 as they're just a holding company with $2 billion in cash. But now let's talk about what the merger rumors are saying, what the merger will look like, and where the stock will go. I already stated this in a previous video, but assuming the merger happens, Lucid Motors will probably get $3.5 billion in cash. And this merger will value Lucid Motors at $12 billion, but this is a pro forma valuation. So this basically means that if Churchill Capital stock was at $10 when they merged, the combined company valuation would be around $12 billion. But because the stock is trading at $60, the valuation of the combined company, if they merged today, would probably be around $72 billion, but this is a rough estimate. And so right now, it looks like everyone is waiting for a DA or definitive agreement between Lucid Motors and Churchill Capital. And this agreement would basically mean that Lucid and CCIV will agree on a date to merge. They'll also give information about Lucid Motors, like their production, their projected numbers, etc. And based on the news that's coming out by various news sources and the institutions that are buying CCIV, I do think they will make an agreement this month. And I think it is also important to understand that institutions own over 50% of Churchill Capital stock, which means they also think this merger will happen, and they actually bought it near the $30, $40, and $50 ranges. So now let's talk about what the stock could potentially do if there is a definitive agreement. I think this could lead to the stock hitting maybe $80, or people might start taking profits after the agreement, but it all depends on when they decide to merge. So if there is a merger date within 1 month of the definitive agreement, I think people will continue to hold their shares and more people will buy in, which will lead to a surge in the stock price, and the stock could probably hit $80. But I think the stock has the potential to hit an all-time high of maybe $100 during the time between now and when they merge. However, there are many important things to know. One thing to know is this huge rally is completely based off hype, and this stock is being valued at $72 billion now, and if it does merge at maybe the $100 level, its market cap of the combined company will be $120 billion. And no matter how good the foundation of this company seems, this company doesn't have any sales yet. So you can't justify its valuation yet, because a company called NIO is being valued at close to $85 billion right now, and they're delivering almost 7,000 vehicles per month, and it's increasing, and they're doing records month over month. From the looks of it, this stock does seem like a bubble, so it might hit $100 or $120, but at the end of the day, 6 months from now, I do think the stock will be trading lower than it is today. So for those of you who have bought the stock at $10 or $20, do consider putting its trailing stop losses. Yeah, the stock could hit $100 or $120, but why risk the profits you already have? So this is where you could use trailing stop loss so you mitigate your risk, and if the stock does drop, it will automatically sell and you will make sure you make a profit, and if the stock continues to rise, then you'll make even more money. So let's say you want to buy the stock long term. Do you buy, hold, or sell? So Lucid Motors, I think, is set up great for the future. Right now they do not have any sales, but they are working on 2 factories which could potentially produce up to 400,000 vehicles each. And I believe the CEO said that by 2027 they'll be producing more than 700,000 vehicles per year. However, at the end of the day, they won't be selling vehicles until spring of 2021, and this whole year will be pretty slow for them because it's their first actual year of operation, and there might be low sales this year because their production capacity might not be that high. So I think right now, being valued at a potential $72 billion, and it might actually go to $100 billion very soon, I think you might be able to get a better deal to buy the stock in the next 6 months to 1 year. So what I'm doing is I'll probably sell most of my position near the $70 or $80 levels, and then if the stock does drop to maybe $40, I'll add some, because I do think there will be a hard sell of looking at previous SPACs like Quantum QuantumScape or Nikola. Even though Lucid is much better positioned, it doesn't really matter when it does come to these SPAC mergers. And I don't like the fact that it's being valued higher than NIO, which is a company that's going to eventually do with either this year or next year 100,000 deliveries. So I do like NIO more than CCIV right now, and even though I think the EV market is in a bubble, I think NIO is much better positioned for the long term. And I do see that because of the recent sell-off with NIO and that it dipped like 3-4%, people are trying to sell their position and buy some other stocks for a short-term profit. And there's nothing wrong with going for a short-term flip. I actually did it with CCIV, and I do think a lot of SPACs can be quick short-term flips. But if you are investing in NIO, what you have to understand is this is a long-term play. It's just a stock that you're gonna have to buy, and if it does drop, you have to dollar cost average and forget about. And long-term, I think it will be exceptional. But if you are looking for short-term profits, I think SPACs could be the potential way to go, especially if you get them at $10. And once they do find a merger target, they do tend to go up 30 or 40%. Now, this won't last forever, but you guys can take advantage of the opportunity that's there with SPACs going up right after they announce a merger target. So there's absolutely nothing wrong with short-term flips, especially with what's happening with SPACs right now. However, I do think it's important for you guys to hold a couple of long-term stocks, and I think one of that could be NIO. And I think Lucid could potentially be a good long-term hold if the valuation comes down a ton, because they're valuing a lot of growth. And so this was just my thoughts on the recent CCIV rally, and now that I'm looking at it, it does look like it did sell off a bit, and I will be making another video very soon on that. And with that being said, if you guys did enjoy the video, please do leave a like and subscribe. Also comment down below what videos you'd like to see, and thank you for watching.